I want to go to this idea that you're talking about ECB rate cuts fueling the economy, and this idea that any sign of economic growth is actually going to possibly cause oil prices to go higher.
Right.
Is oil still the macro play that it used to be, given some of these other aspects that we're talking about?
I mean, I still think it's very important to the macroeconomy. It's still, it goes into everything we do, from producing a loaf of bread to just any, I mean, plastic, or we're surrounded by plastic, right? I mean, everything's oil, right? I mean, all of it's oil. But the reality of the matter is, I think as we transition the economy, right, there's commodities that are going to be probably better positioned to take advantage of that run-up, and some of them are copper, which has been a source of high speculation in markets, right? Every fund, I think, is being long copper, kind of waiting for price to rally at this point. Of course, once you get to the end of it, prices do pull back because you need demand to follow through. But those commodities are the ones that are going to benefit. And I think there's another big dynamic here is U.S. shale, oil and gas, still playing a gravity force, strong gravity force on energy markets. We've seen mean reversion that we didn't see in the 70s, right? When we had the big inflation waves in the 70s, prices just kept going and going and going. This time around, prices rallied, shale responded, prices came straight back up. I mean, gas traded at 148 in NYMEX, right? And we saw Waha prices in the Permian Basin going negative for weeks, right? So we are in a world where there's commodities that are very sensitive to prices on the supply side and commodities that are not. And that's kind of the imbalance we're seeing.
Elise is right to bring this up. How distorted are the cyclical signals now in places like copper? How distorted are they? Are commodities becoming more influenced by secular themes than maybe the sort of economic cycle? We used to talk about the PhD in economic cycles that copper has. I'm just wondering whether we've sort of confiscated that and taken it away. A
little bit. We have a great chart that looks at PMIs versus year-to-year changes in copper prices that shows that we are probably 10-15% above the levels justified by industrial activity and PMI indicators, right? So, and of course, that's what we've corrected. Because, like I said, we need to see the rate cuts, we need to see the demand coming through, we need to refill those inventories. There's a big restocking cycle coming if, indeed, we go into a soft landing scenario, right? Which I think is what the market's setting up us for. So that's our view. So I think, copper, aluminum are going to be beneficiaries. We like silver. We don't like nickel as much. We think there's a lot of nickel on the supply side, but then there's other commodities. I think if you go on the other end of the agricultural sector that are also hard to produce in a short run, like cocoa and coffee, and those have also had big runs, right? So it's really a tale of two cities on the commodities markets.